Oh yes, good old Doge, man. Good old meme coins. I mean, you can still make money off them, as goofy as it is, and like as against them as I kind of am. I mean, I'm not opposed to making money, so it's still ethical. Like it's not. It's still just basic trading. So if something's gonna go up in value, I'll buy it. Got no problem in that. So price is now above this moving average. This is a good sign for you bullish guys on Doge. Delete this candle or delete this zone. We don't really need it. So just looking at this first glance, higher highs, higher lows, now broke this moving average, so and has created some support here too. So this tells me that it still wants to go up. So you can see yesterday's big bullish engulfing candle over the previous days. So great sign that still wants to go up. There's a ton of momentum. As of this week, you can see it's been just a massive bull candle. Last 3 weeks have been bullish, and then even the week before that was barely a pullback. So you know, Doge is bullish, guys. Like it by this definition, it really is. So looking at this previous area of resistance at about 9 cents. So Doge is a good buy. I would say now to about 9 cents. That is the next area of supply. Maybe a little bit above 9 cents. So I would say you're good to buy this. We'll shorten this up a little bit. You're good to buy this now, or make this a little bit longer. This is your area for take profits. So you could buy it now if you want. You'd have to set your stop below this zone though, for it to be, you know, real like on the safer side. So you could buy it now. That's not a very good R. It's only 2. I would wait for something like this. I mean, this is a perfect world. Obviously, you would have rather got in on it back here a couple days ago, but you missed that chance. So now this is your next bet. I would wait for price to come back down to, you know, the 77.12 area, right at this area of resistance on the daily, before entering a long position and getting, you know, an 8.5 R. If you wanted, what you could do is look for something like this. So this is kind of a little secret here. So you can catch these mini trends. So I would bet that price is going to come down to here, and all we're going to do is do a retrace of this little leg here. So price came up, now it's pulling back. This is going to be your area to buy here. As long as price rejects, then there's a good buy there at the, you know, 79 cent level kind of thing. So, or 0.79 cents, sorry, 7.9 cents is a good buy. So wait for price to come down to this 50% level, and as long as it shows some rejection on the 4 hour, I mean, there is a chance that it doesn't even break that low. So this is where it gets really technical, and I mean, you don't have to be this technical, but I like to, because then I kind of make the best decisions that way. So if price rejects this area a couple more times, I mean, or even just on this 4 hour, like, by all means you could jump in on something like this. So now you're looking at a 20R, but that, you know, the tighter your stops, if you use stops, the less you're, you know, the less likely your trade is to play out, and the more likely you are to get stopped out if you use a stop loss. So this is where, you know, just technicalities come into play. So you can either enter the trade here, basically now, and set your stop below these 2 zones, because, you know, you don't want to get stuck in this retracement. So like, yes, it's bullish obviously, but price is currently retracing, you can tell. So it made this huge move, and now it's been pulling back. There's a massive wick here, so you don't want to jump in on anything. So I got a lot of zones here now, but you don't want to jump in on a buy if it's still in the retrace. So you either wait for it to, you know, hit this zone and then bank on it getting stopped at this zone and then the liquidity coming back in and pushing it up, or you wait for price to break the upside. So something like this you could also do. I would probably be more inclined to do this, and because of this situation you would still get a really nice R, and you would know that you're entering the position based on bullish momentum rather than bearish. And what I mean by that is if you were to enter on this zone or this zone, you're basing your entry on bearish momentum taking you into a support zone, whereas if you took a trade like this, you're basing it on the fact that price is bullish and breaking the upside. So this trade, for example, would be based on breaking a resistance. Instead of finding support, you're actually breaking resistance and then banking it on the bulls coming into the market and carrying you all the way up. So hopefully that makes sense. I think that is the best. I think that's the better of the two trades, is to just wait and make sure that bullish momentum is there, not to be too confusing. But I would wait for something like this. So wait for price to come up here, then come back down, reject this zone on the upside, then you're probably good to go straight up. Because until then, I mean, this could just be pulling back, and this could take, you know, if there's no real liquidity in the market, I mean, this could take 2 days for it to just like trickle down into this zone, get stock, hang out, you know, maybe drizzle down a little bit further into the 618 level. So like you could get stuck in a trade for 3 days when you could just hang out now, set an alert, you know, like I would do here. I'll set an alert, so when price cracks this area, that means we're good to go. Like that means the bulls have entered, the liquidity is there, the momentum is there, and it's time to buy. So that is Doge.